Good morning, good afternoon, good evening, and welcome to the Thursday, the 27th of October, Bull versus Bear webinar. Steve Miley on the call for TradeDay.com. Welcome, everyone. First thing I want to say is thank you. Thank you to all the traders who came on to the Trader Mind session we had yesterday. It was in the US morning, European afternoon, and successful session. Lots of positive feedback. You can see it here. Okay, so you navigate to it's even though it says in here, we'll get this image changed if it says the link was not started yet. The recording's in here, so you hit the play button. I'm not going to hit the play button, but you in here you'll find it. I'll share the link in the chat. The link is in the chat. Okay, simply though, you go here to Trader Education. On the drop down, Trader Mind sessions. That's where you find it. Okay, Trader Education in the members area, Trader Mind sessions. All right, go and have a look. Loads of really useful. It's some really good questions from those that were on. I think some valuable insight. I mean, I'm going to say that, right? I was giving the insight, so there you go. But it was appreciated by those that were on. Good feedback. Thank you for participating. We'll give you the heads up when the next one's going to come. If you didn't get to see it, please do check it out in here. I'm signposted you to it. Okay, guys. So yeah, take a look at the Trader Mind session that we did yesterday, US morning, European afternoon. Right, let's take a look at what we've got going on today, calendar-wise. So, light on European data this morning. We do have the ECB coming up today, though, okay, in just under 45 minutes, okay? So, watching out for that later this morning, 8:15 Eastern time. Watching out for that. And then also durable goods in just under 1 hour alongside GDP. Even though GDP's big number is very backward looking. However, saying that, this is the preliminary Q3 data. So Q3 is only just gone. So this is more important than some of the data we get on GDP. So the preliminary Q3 data, Q3 obviously just gone, the quarter on quarter data. So we will be watching out for that. But as important in here, also the PCE. Do we get the PCE data or PCE tomorrow? PCE data, no, I don't see it. PCE data tomorrow, though. I think there's usually one element of PCE data. So we're watching out for that as well. We also then get a little later the ECB PES conference. So the decision comes in just over 40 minutes time, just under 45 minutes time. So that is, what time is that for you guys? That's going to be at 8:15, right? I think, yeah, 8:15. And then in here at 8:45, 30 minutes later, Eastern, we have Lagarde speaking at the press conference, and she's speaking again later on today as well, which is odd. But yeah, the press conference comes at 8:45. I say so. All eyes on that going into the day. We also get in here, don't forget, overnight. So after the close, after the bell, the Bank of Japan interest rate decision. Okay, and it's going to be interesting to see if there's any mention of the intervention that we've obviously seen twice to stop dollar yen rallying, to stop the weakening of the yen that we've seen in here, the intervention that's been seen in the last few weeks. So that'll be interesting to see if there's any reaction to that in their monetary policy statement, or maybe even something through the decision, but I doubt on the decision. So yeah, in here, quite a lot going on. Two central banks in play. ECB very shortly, Bank of Japan after the bell, and then in between we have the US GDP durable goods data coming through. On the earnings side, we had Meta, which take a step back, Meta/Facebook after the bell last night. A miss on the EPS, beat on revenue, but nevertheless a very negative overall outlook. Facebook/Meta down 20% in after hours and pre-hour trading. So certainly a negative there, but you can see most of the stuff in here green. We already mentioned from yesterday, Boeing was in red, but outside of that, most of the stuff in here coming in green. Going back to today, obviously critical today is going to be after the bell. What we have after the bell, we've had a few out already. McDonald's in here in green. And then Intel coming after the bell. But the big two, and Caterpillar actually, Caterpillar reported positive. Remember, Caterpillar seen as a barometer, a bellwether of the US and to an extent global, but the US construction industry. So beating expectations. So that's definitely a positive. But then the big is after the bell. Apple and Amazon coming after the bell. So we're certainly going to be keeping an eye on them in after hours trading. What are we going today? Well, Credit Suisse are going for a big restructuring, not really impacting the markets you guys are looking at right here, right now. Meta down 20%. We've spoken about that already in pre-market. President Xi Jinping in here from China looking to ways to cooperate with the US. That's definitely a positive. And markets in here kind of a little changed after the sell-off that we saw going into the close ahead of that metadata. So we had like a dip and then a strong rebound yesterday and then a sell-off in the latter session. And then obviously after hours were a little lower, particularly on the NASDAQ this morning, given the fact that Meta is down. So S&P ends lower, snapping rally on mounting slowdown fears. Don't know where that really came from, slowdown fears. You know, we spoke about obviously after hours. We'd already had Microsoft and Alphabet from the day before, but they rebounded after that yesterday. Boeing missed, obviously, in here. But, I think they're just fitting a story. The S&P ends a 3-day winning streak on Wednesday, closing in negative with gloomy earnings guidance. So, yeah, I mean, earnings over the last 24, 36 hours have not been great. You have to admit that, right? Stock slippers, traders await ECB, US futures waiver, Meta slumps, we know that, Euro ECB. 75 basis points, if you didn't know, is what's expected, pretty much nailed on. The forward guidance is going to be what's important from the ECB. Could have an impact. Do keep an eye on it. Could certainly have an impact on US markets today. Futures climb on easing rate hike bets. Meta plunges. Yeah, we know that already. But futures not really climbing. They dipped and rebounded this morning. Technically gains as China stock in Hong Kong have rebounded, having had that big rout at the beginning of the week. And then dollar yen in here going to another new high in here. Dollar yen going down, Dollar yen retracing. It's that intervention, the second intervention that we had last Friday, has so far been successful. We saw a big sell-off after the intervention in dollar yen, then a rebound. And since then, the rest of this week, the market has been tracking lower. So that dollar yen intervention that we saw last Friday, at the moment, seen as a successful for now. ECB to double rates to highest in over a decade. So they've gone from 0 to 75, going up to 1.5. Twitter shares to be suspended on the NYSE as Musk nears takeover. Something expected for that by, I think, by tomorrow, right? There's a court deadline for tomorrow to close out the deal. German Chancellor said solution can be found in speculative gas prices. Gas prices in Europe have been receding. Gas and electricity prices, wholesale gas, wholesale electricity prices have been receding over recent weeks, partly to do with the calming of anything going on in Ukraine to an extent, and then also the fact that the Europe are looking for a solution to these gas spike hikes. So the market has been drifting lower. The gas price, UAT, as a positive in here from British retail sales we did have this morning from the Confederation of British Industry. They were higher, so saw a bounce. Okay, so a glimmer of hope there. European bourses this morning down mostly with that late sell-off that we saw in the US. Remember, the European exchanges closing ahead of the US, so that latter session sell-off that we saw being picked up by the European bourses this morning. So the French and the German down nearly 1%, down over 9/10. The FTSE, the UK index, flat going into today. And having dipped, sold off yesterday, Nasdaq and S&P was slightly lower. Dow finished pretty much flat. We've actually seen a rebound in the Dow. S&P is pretty flat, but the Nasdaq down. Meta and obviously broadly tech pulling the Nasdaq down with those negative tech results we've seen over the last 24, 48 hours. What else do we have in here? Nothing much changing here. Actually, a slight dip in this. This is the Fed Watch tool. Remember, this has been sitting up at the high mid-90s. And if we go out to the next meeting, growing chance now of only a 50 basis points. So receding chance of the 75 at year end at the 14th of December meeting. So that's continuing to fall. That speculation for that. And then the peak in rates continues to now be at the 475 to 500. It was previously at 500, 525. So a lower peak in rates. And then the next, after this next hike, which is pretty much still nailed on for 75, the December hike, we're only looking for another 50 to come. Okay, let's take a look at the charts. We'll kick off. I'll go to the S&P. So yeah, it was a negative candlestick yesterday. We obviously started off on the back foot with the previous overnight news on Google and Microsoft, and then we had a decent rally through the session up to a new high, and then markets selling off into the latter session, ending up a negative candlestick. So we've got this kind of shooting star type candlestick for the day. So that's definitely a negative setup. But if we zoom in for the 15-minute chart, then you are getting a slightly different tone between the NASDAQ and the S&P going into today. That is setting up, though, worryingly. What have we got there, guys? Potential head and shoulders top, right? So let me get rid of all the old drawing tools. So in here, shoulder, head, that's yesterday's up and down, and then a shoulder on the overnight, okay? So a potential in here, we've got the neckline running across here, you could argue already broken the neckline, okay? But in fact, you would have to argue you've broken the neckline. Even if you took it off this point here and here, that we've broken the neckline, so head and shoulders top. We have held, though, I think just held at that low there on that neckline, on that shoulder, sorry. So that low, 36 and a quarter, the low just recently 37 and three quarters. So just holding that low, that's the first low, right? So we haven't had a Dow theory reversal. Remember Dow theory, higher highs, higher lows. We haven't broken below that, but we have had a lower high. Okay, these two highs here, lower than this high up here. So potential head and shoulders. We have broken the neckline. I think if it takes out that low there, if it goes below 36 and a quarter, it looks a lot more negative. So I think that's your downside trigger. On the upside, it needs to give us something more, I think. You've got the trend line that comes off the top here, either through there, or you got the more accelerated one, slightly more accelerated, that comes down, through here. So they're kind of in the same kind of area. They're coming in around 38, 52, 53. Up through there is your initial trigger. Then you've got these overnight peaks, this little one here. That's at 60, 38, 60. And then these two failure peaks here. So they are 67 and three quarters and 68. So basically through 68. So you've got 60, 68, and then the trend lines come in around 52, 53. Downside through that low there, 36 and a quarter, and then the next lows here and here, we've got 31 and a half and 30 and a quarter. So down through there, those are your triggers on the downside for me. No strong view going into today. Hold a gun to my head. I'm slightly bullish, very slightly bullish, but I am worried about that head and shoulders. Combined with the shooting star candlestick, okay, it does worry me. I mean, I'm 55 45 at best bullish, okay. Go with the break on here, either up through the resistances here at the trend lines, or down through these swing lows in here, particularly even through the first one at 30. What did I say? 36 and a quarter. Okay. Nasdaq sets up a little bit more negative. So it was an inside pattern. We didn't make a new high yesterday. Inside pattern went right the way down yesterday to the previous day's low, and then overnight has broken that. So more of a negative signal there. Didn't make a new high. Negative inside pattern in here. And if we go to the 15, that looks a lot more negative, right? So again, you've got kind of this topping pattern. You've almost got double top up here that's been confirmed already. So let me just get rid of these, the rest of it in here. So the double top pattern gets really confirmed below that low there. You can see the market held, pierced it here, and then more recently down through. So the double top pattern is really in. Runs through there, right? So you can see went, held, flirted with it on the overnight. That's Asian hours. And then boom, through European hours through. If you can get back above there, that line is at 436 and a quarter. Back through 436 looks kind of slightly positive. I mean, realistically, again, the same trend lines, either from the top. Got that one there. or the more accelerated one, but they're going to come in not far off of each other through there. So actually, the more accelerated one is just not far above the higher. I'd probably want to wait for the higher one. So 11,445, 450 on the higher one. This one here is just above where we're trading now, right? So above like 410, and we're through that. So 410 would break that, but I'd probably want to wait for that one. Otherwise, the peaks up here and these double failure peaks, we've got triple failure peaks here at 537.5, 537.5 again, and then 543.25. So 37 to 43, 537, 543 on the top side up through. But then you've also got the trend line, as I say, that's lower around 445, 450. Downside, I mean, you've taken out a lot of this support already. There's not a lot on the downside apart from the low, the current low. Current low, 365.75. Below that, you've got a long way down to this low here. There's nothing really in here. You could put the fib on. Let's see what the fib does for us. Does it give us anything? No, through the 61.8 already. The only thing we could gather in here is maybe the 78.6. Get there in a second. $78.6 is down here, 11,315 kind of area. Okay, so maybe that's another trigger on the downside. Got a little support low there in here. That's 344.75. So there's your triggers on the downside. Again, this is more negative. I'm like 50-50 here. This could go either way. Yeah, I mean, easily. Let's get a look at gold and oil. Start off on oil. So we pointed out potential ups. We said there was this choppy range. The market was happy to buy at the bottom of the range, but didn't want to sell at the top end, and boom, blasted out through there. Let's stop to these resistance, these peaks here. We've got three peaks up here at 88.52, 88.38, and 88.66. The current highs from yesterday and today, 41 and 48. So up through the basically 52 to 66 area gives you the next impulse. Okay, you see with this morning, dip and a rebound, step into the 15-minute. There's the strong rally, high level consolidation, dip and a rebound, hasn't even really approached any support, rejected the downside. Yeah, I'd say through those levels we just said there. So what was it 88, 50, 52 and 66 was it? Here we go. High there. I think that was right. That's the 88.66. And this one here, 52, 52 and 66 will be the triggers on the top side. Really, it needs to go back below the overnight low in here to signal more negative. 33, 87.33. Gold, kind of sideways, but slightly positive. It was still, dining out for the bulls on the back of this big impulsive reversal we saw last Friday. Been choppy, but certainly choppy and up. Go into the 30-minute chart. You got that inverse head and shoulders we flagged yesterday. Market didn't really want to build on it, kind of flirted with it, then failed at this little peak up here. 1679, we got up to 1679.4. I think we need 1680. You got the little counter trend line running across here now. Up through there. It could be a trigger on the upside, the first trigger. 1671, but realistically 1680 is what I want to see to get more bullish. Wouldn't really want to play this from the bear side for the moment. All right. Any questions out there, guys? Anyone? No? Quiet? All right, guys, check out that Trader Mind. Remember, in here, Trader Education section. Insight from myself and James, just on the psychology of trading, risk management, dealing with your emotions, all that kind of stuff. So take a look in there. It's about an hour. And I'll be back with you with another Bull versus Bear webinar tomorrow. Till then, take care, stay safe, and have a great trading day.